morning. Good morning. Thank you guys so much for tuning into today's live stream. So today we have, today is March 28th, 2025. And for the economic calendar, we have core PCE price index here that was released at 7:30 a.m. And besides that, we have revised consumer sentiment and revised inflation expectations. So these are some things that I would consider taking in mind of. Let's ask ChatGPT what this is specifically here. All right, so. Is a key inflation indicator that measures the month-over-month change in prices for goods and services consumed by individuals, excluding food and energy, which is more volatile. So what it relays specifically is inflation trends. It shows how much prices are rising or falling on a monthly basis, giving insight into inflationary pressures. Consumer spending levels. If PCE rises, it means consumers are paying more for goods and services, which is reducing purchasing power. Federal Reserve policy implications. So, the federal funds are going, or the Federal Reserve is going to watch this economic news, and they're going to consider, possibly hiking rates or cutting rates, depending on if the core PCE price index increases or decreases. Market impact, since it is the Fed's preferred inflation gauge, higher core PCE readings can trigger market volatility, influencing stocks, bonds, and forex markets. So it's essentially the Fed's inflation indicator, is what I am understanding from it right now. But coming into today here, more specifically, the technicals wise, I would say that I'm bearish. So let's just, okay, there we go. We finally loaded. So this is yesterday's candle here. So this is the daily candle that was created here on Thursday. And with the way that we closed here on that specific candle, I'm rather bearish, right? So notice how the way that we closed here on this daily candle, this is where we closed, by the way. And I want to note that by a red line. So notice how we closed below Wednesday's low of day. Because that red line is below the orange line, I would then treat this inefficiency here, this fair value gap, as a breakaway gap, right? Because of the idea that we closed below the second fair value gap's candles low. This is a fair value gap theory. It's just kind of something that I have kind of thought up of as a way of objectively defining a breakaway gap or a non-breakaway gap. And so coming into today, I wanted to see us take out previous day low, right? Or consolidate. However, coming into the morning, we immediately coming into Asian session, we took out previous day low. And now, because we took out previous day low, I don't really want to force a bias here, a daily bias onto this morning. It's coming into this morning. Because if I were to ask myself, what's my daily bias? Or the daily objective? Well, the daily objective has already been taken out. I can't really see anywhere else where prices would want to be, right? So here, like I said, I can't use the daily time frame, and I can't use the weekly time frame. So coming into this morning, I'm actually going to use the intraday time frames, such as, the 4-hour time frame here, um, the 6-hour time frame, the 8-hour time frame, and the 10-hour time frame. So once those two, or not two, but once those 4 candles close, right, each one of these candles are going to have an objective. And so the ones that close during the morning session are the 4-hour candle and the 8-hour candle. And with the way that those 2 candles close, I can kind of anticipate where prices wants to go depending on how we close, right? So if we create a bearish 4-hour candle and a bearish 8-hour candle, then I would consider, trying to look for I guess a sell. But if we're not given that, then that's completely fine. I would just sit on my hands, right? But that's essentially what I'm kind of looking for coming into today, just to see if we can have, if we could get a bearish 4-hour candle or a bearish 8-hour candle. But yeah, hopefully that gave you guys some insight about how I view prices here. So this is the 10-hour chart here, right? And if you guys were with me, you guys would have known that I took this long here, right? I took this long where prices dips into this 10-hour fair value gap and expands higher. And so that trade right there was the only trade of this week. And notice how once prices breaks past that swing low, this orange line here, once prices breaks past that swing low here, I'm actually pretty bearish, right? So I would consider this as a market structure shift. So prices trades into this inefficiency, we respect this inefficiency, and we expand higher. Well, if we end up taking out that swing low that was created to take out the swing high, then that would be considered a market structure shift. Not only that, but we also traded into an inefficiency as well. So we trade into this 10-hour fair value gap, and so this strong low now should not be broken past, right? If we break past this low, then I would favor the bears. And once we did that here, so I'll show you guys once we do that here on the 1-hour chart. So we basically took out that low here on Wednesday, and once we took out that low, we just continued to expand lower and lower, right? And it's reasonable for us to be I guess, declining here, bearish, showing that bearish pressure, right? The reason being is that we traded into this weekly fair value gap, and I told myself that we should respect this weekly fair value gap if we're bearish. And so, us respecting this inefficiency here isn't something that's not normal. It was something that I actually was kind of anticipating. So that's kind of, what I have in mind here. And yeah, so, kind of an insight of what I want to see here coming in this upcoming, I guess, week. But yeah, I really do want to see lower prices here, right? So if I show you guys the 5-week chart, you guys will see why I'm actually favoring weaker prices. So this is the weekly candle, or the 5-week candle, the previous 5-week candle, right? And the way that we close here on this candle is it's suggesting lower prices, right? I can anticipate, I'm just anticipating that the next weekly candle is going to do something like that. Or the next 5-week candle. I keep saying weekly candle, but it's a 5-week candle. And this is something that I'm kind of anticipating here. Right? I want to see us create that next week or 5-week candle as a bearish 5-week candle. Alright, so that's kind of what I have in mind. Let's take a look at the Wall Street. I said Wall Street Journal. I want to take a look at what this company is, CoreWeave. So it's part of the NASDAQ, but it's not. Huh. Why can't I see the price of this? Well, let's see if I can take a look at it on $40. All right, but yeah, so let's see what we have in agenda here for today. So yeah, we don't have a daily objective. Previous day low has been taken, which is why I don't have an objective. And today is the second, or I guess the second to last day of the trading month, right? So that's a fat line. Okay, so this is the monthly candle here, right? And with the way that we are closing here on this monthly candle, pretty bearish. It's a pretty bearish monthly candle. And we close in about, like I said, in 3 days. In 3 days, 2 trading days. And so this is something that I just want you to, I just want to draw your attention towards, right? Because once we close on this monthly candle, we're going to have a new monthly objective. Are we going to continue lower here on the indices, or will we continue, or are we going to have some sort of reversal, right? But us, creating this kind of us creating this bearish monthly candle here, or it appears to be a bearish monthly candle. In 3 days, we'll for sure know, but because of the way that we're creating this candle right now, pretty bearish, right? Same thing with this weekly candle as well. So this weekly candle, we're about to close on this weekly candle in about a couple hours, and with that, I actually am anticipating for the next weekly candle to take out the weekly low. Just if we were to close right now on this weekly candle, right, where this orange line is, what can you anticipate with the very next daily candle? What are you anticipating that next weekly candle to do? That next weekly candle should at least take out the weekly low. That's crucial, right? As long as you kind of know kind of where prices wants to go. I know it might not be a lot of range, but with leverage, you can really turn this into an opportunity. But that's kind of where I have my mind towards right now. And also keep in mind that we did trade into inefficiency and create this bearish candle. So there's kind of a reason why prices, you know, created that bearish weekly candle in the first place, because of like I said, because of we trading into that weekly fair value gap. Because the fact that we traded into that weekly fair value gap just gives me more incentive on lower prices. So let me note something that I have learned with the whole core PCE index, price index. So core PCE is a key inflation indicator. Measures and prices slash services by consumers in US. It shows how much prices are rising and falling on a monthly basis, giving insight into used by Federal Reserve. So I'm gonna go Federal Reserve's preferred inflation gauge. All right. Well, we have about 10 minutes left here on the 4-hour candle and the 8-hour candle. I'm just gonna, continue to be patient. I don't want to force anything that isn't necessarily there, right? So just being patient here. Not doing anything as of yet. I'm gonna go into my trading journal here with you guys, and go like just a brief, overview of the trade that I took here on Tuesday. I think it was Tuesday, or no, it was Tuesday. Gotta be Tuesday. So let's take a look here. So if you guys watched the live stream here. Oh yeah, bye man. So this is the live stream here on Tuesday. And if you guys notice, this is the trade that I was in currently that day, right? So, I took my entry at the 10-hour fair value gap, which I'm going to go over with you guys pretty soon. And I had already moved my stops break even. So in this position, I was in 6 contracts, right? And I was trying to get a total of 172 points on NQ, roughly 690 ticks here. And so you guys are gonna see, like, I ended up getting my targets all met, right? And I just wanted to show you guys that I was in this position, and it was live on stream, so hopefully that gives me some credibility. But yeah, so let's go into the trade here I took on Tuesday. So the reason why I even took this trade here, right? So essentially, what's my higher time frame objective? What's the reason why prices wants to continue higher? Why am I looking for higher prices? Well, here, this is the 12-hour time frame, right? All of these candles here to the left side are 12-hour candles. And so in this 12-hour chart, there's a swing high. There are swing highs and swing lows everywhere, right? And so I marked up from this swing high to this swing low, there's a dealing range. And notice how there's that gigantic red box here. And you probably have an idea of what it is. And that red box is representing premium prices, right? In a dealing range, there's equilibrium, and equilibrium separates the discount level, or I guess the discount price and the premium price. And we haven't traded into this premium level yet. We haven't traded up into this premium price point yet. So my idea for this trade is that, hey, the daily candle is suggesting higher prices, right? It's already suggesting to me that we should take out the daily high. But the other reason why prices should continue higher here is to retrace back into that premium price range. And so with those two reasons in mind, I'm favoring higher prices, right? The daily candle, like I said, the way that this candle even closed, it suggests to me that, hey, like, we should take out the daily high. After we take out the daily high, this is the key point. After we take out the daily high, we should expand higher towards the premium of the dealing range to be able to sell at a good price. So essentially, let me rephrase that. So essentially, I'm buying to sell, if that makes sense. And so that's the higher time frame objective, and that's my model. My model is how I'm aligning myself with that specific idea. And so going from the daily model, I go on to the 4-hour time frame. So this is the 4-hour. These are 4-hour candles. These are 6-hour candles. As you guys can see, there are labels on it, 8, 10, and so I'm trying to find a entry pattern, right, that supports the idea of higher prices. I'm trying to find an entry pattern that supports us continuing higher, and that supports the idea of us taking out previous day high. And so here I've noticed here on the 4-hour candle, or 4-hour time frame, 6-hour time frame, 8-hour time frame, 10-hour time frame, there are fair value gaps that support the idea of higher prices. And so more specifically here on this 10-hour fair value gap, you'll notice that this fair value gap here could be rebalanced and should be respected if we're going to follow the daily order flow, which is higher prices, and the idea that we should retrace back into the premium of this dealing range. And so I set up my buy order. I have my stop loss at the 6-hour fair value gaps. Basically the fill of this 6-hour fair value gap, the complete fill, because I'm not really anticipating a complete fill. This stop loss is actually below the consequent encroachment of the 10-hour fair value gap as well. So it's a reasonable stop loss. And so once we trade into that fair value gap, that 10-hour fair value gap, right? I'm now in the trade, right? I'm in that trade, and prices begins to expand higher. And so we took out previous day high here during the morning. And so like, oh wait, I'm sorry, I got distracted. I had a message, but yeah, we traded into that 10-hour fair value gap, and then we took out the previous day high. So if you guys remember what I did on my live stream, once we took out that previous day high, I moved my stops to break even, and I'm letting the trade do its thing, right? And so you'll notice here, I'm pointing out this 10-hour fair value gap, or 10-hour candle, and this 8-hour candle. Sorry, 4-hour candle and 8-hour candle here on my live stream. And I'm like really urgently saying that, hey, the way that we closed here on this 4-hour candle and the way that we closed here on this 8-hour candle, it's suggesting continuation higher. So here, whenever I'm in this trade, I know that we already took out previous day high, but because of the way that we closed here on the 4-hour candle and the 8-hour candle, I can anticipate a continuation higher. And that's essentially the breakdown of that trade, right? Very, very simple approach. All I'm looking for are the 3 components of a trade setup: higher time frame objective, a model, entry pattern. Some other confluences that I used were standard deviation and the lack of SMT. Lack of SMT here is actually extremely important, because essentially the lack of SMT suggests that there are room for continuation to upside or downside depending on order flow. And the order flow here is suggesting higher prices, and because there is a lack of SMT, meaning that there's not a divergence between ES and NQ, because there's no divergence, I can anticipate higher prices. And yeah, so coming into the morning today, like I said, I'm just gonna wait until we close here in the 4-hour candle and the 8-hour candle. So let's see here. So it appears that we're about to close here on the indices, not indices, but on the 4-hour candle. And let me get my my platform set up. Give me 1 second. I have to move my stuff to the other side. Oh wait, whoops, I shouldn't do that yet. Alright, so with the way that we're closing it on the hourly and the 4-hour, it's suggesting lower prices here actually. And believe it or not, I would actually, I was gonna say I'm anticipating and I'm supporting the idea of lower prices, but as soon as we opened up here at 10, we took out the 4-hour low. So let me give you guys an idea of what just happened there. So let's take a look at this 4-hour candle, and let's take a look at this 8-hour candle. It's a very simple approach, right? It's super simple. So with the way that this 4-hour candle closed and with the way that this 8-hour candle closed, what can you anticipate? In my head, I am anticipating that the next 8-hour candle and the next 4-hour candle should take out this 4-hour candle / 8-hour candle's low. That's as simple as it gets, right? And as soon as we opened up at 10, like you guys saw, that 1-minute candle instantly took out the 4-hour low, which is that green line. And so, you know, very interesting, right? We used that volatility to instantly took out the low. And yeah, so that's my morning objective. I mean, it's already been completed. I was hoping to get an entry so I can show you guys and, you know, possibly take a trade here on stream with you guys, but it appears that I'm not going to be given that opportunity, which is completely fine. My entry pattern, just so that you guys can have more of a vision on how I see prices, is that it would have been based off of this 1 minute fair value gap, and the setup would have been something like this, right? It would have been something like this, 1-to-1 ratio, but yeah, that's what it would have been. Yeah, so I mean, there's not really anything else for me to say. I mean, my morning objective has been completed, so I don't want to force anything anymore. So let's see what just got released, right? So at 9 a.m., revised consumer sentiment was released and revised inflation expectations. Wow, so you guys can see inflation is actually rising. Okay, so here, inflation expectations at 9 a.m. we released, and it's was at 5%. So percentage that consumers expect the prices of goods and services to change during the next 12 months. Actual greater, okay, so why traders care. So expectations of future inflation can manifest into real inflation, primarily because workers tend to push for higher wages when they believe prices will rise. And yeah, they are expecting that prices are going to rise in about by 5%. And we also have revised consumer sentiment, which is 57%, right? Consumer sentiment, it's actually extremely low compared to where it's been at, you know, for like in 2015 till about 2020, right? Consumer sentiment has held steady about at a 90 to 98, you know, range, right? But today it was released to be at 57, which is extremely low, and it seems that we're just declining. We have January at 71%, February at 64%, and March at 57%. This isn't good, right? It's basically indicating that consumers they're not really happy of where the economy's going. It's a weak economy here. It's just essentially how are consumers feeling, right? And they're not confident. Yeah. So this isn't very good. Yeah, I mean, this could be like related back to tariffs, how tariffs could be a leading explanation on why consumer sentiment is low and why inflation is considered to be rising. PCE rose as well, which isn't necessarily good, because if PCE rose, that means prices and services are rising. So inflation, no good. And so let's just go back into my trading journal and kind of get a brief overview of the pros and cons here for previous week. So what should I continue to do coming into this week? Well, taking consistent trades, right? having a higher time frame objective, a model, and an entry pattern for every single one of my trades. That's going to lead to consistent trades, right? Consistency is key. For me, a core value of mine is to be consistent with whatever that I'm doing, and I can't stray off that path when it comes to trading as well. So for me, taking consistent trades is probably the most important aspect of my trading, is that I'm able to identify a higher time frame objective, a model, and an entry pattern. I've already gone over some of those like definitions of those three components if you guys want to wind back the live stream. Second, paying close attention to SMT. SMT is really good indicator. It's not necessarily like VWAP or moving averages. It's a price action indicator that shows a trader if there's been manipulation between the markets or so. And so just being able to pay attention to SMT and seeing how the indices are differing from one another, and so that's one key value of mine coming into this week as well. And being patient. Being patient is more psychological. You can't force a trade to happen if your strategy isn't present, or if the conditions in the markets isn't favorable for your strategy. There are going to be times where, for me, there are times where, I have a higher time frame objective, I have a model, there's tons of confluences why I should take the trade. But if I'm lacking an entry pattern, I can't force it, right? I know that there will be a time where, my strategy will be there, and I'll be present. But, if my components aren't there, I'll be patient, sit on my hands, and what can I continue to work on? Focusing on thoughts and actions that are aligned with my goals and my values. The first thing that you should recognize is, what are your passions, right? What do you like to do? What are some of your key values? And then after having a really strong vision and perspective of what you want to do, you then should align the actions that you take and the thoughts that you have with those goals and values. Second, confidence. Be confident in everything that you do. Everything that you ever need, right, is within yourself. Nothing should ever come from the external world. Everything should come from the internal world. And those are the pros and cons. So some improvements here that I can make coming into this week. Like I said, taking consistent trades is something that's always going to be a part of my strategy, part of the way that I trade. They're not going to be, like, if I were to go over any of these trades here with you guys for the past 5 months, 6 months, they're going to show this level of consistency on where, hey, he's able to identify a higher time frame objective, a model, and an entry pattern. Every single one of my trades will have those three components. Second, like I said, be patient. Don't force anything, allow it to come to you. And third, align your thoughts and your actions. Align your thoughts and your actions with your goals and your values. And with that, I do think it's going to wrap it up for today's live stream. Thank you guys so much for watching. And until next time, be safe.